The MA distance from price indicator is a MetaTrader 4, MT4, indicator that can be used with any forex trading system for extra confirmation to enter or exit a trade. This indicator works with all currency pairs and all timeframes. Once you download and install the indicator, it will appear in your trading chart, like the image shown above. Trading forex is easy if you have the right strategy, indicators, and discipline to stick with the rules and strategy you set. Most professional traders make profitable returns consistently. To become a successful trader, you must invest time in learning forex and develop a profitable trading strategy that suits your trading style. You can find hundreds of forex indicators like MA distance from price indicator on our website that can help you in building your trading strategy. Don't overcome emotions and greediness, and be patient and stick to your main trading strategy. If the trades are profitable, stick to that strategy. If not, then move to another strategy. You can go to our Forex Strategies section to explore the latest trading strategies. All these strategies are tested and have shown great results for our members. Self-discipline is the most important aspect of trading. The market itself is not consistent and may drive traders to a losing trade or position. Therefore, providing a stop loss and take profit is a must. Always use proper money management techniques and to start small when you go live. What does Forex indicator mean? A forex indicator is a statistical tool that currency traders use to make judgments about the direction of a currency pair's price action. Forex indicators come in many types, including leading indicators, lagging indicators, confirming indicators, and so on. Popular forex indicators include moving averages, relative strength index, RSI, and average true range, ATR. A forex trader must choose the indicators that fit his or her trading strategy. A forex trader can create a simple trading strategy to take advantage of trading opportunities using just a few moving averages, MAs, or associated indicators. MAs are used primarily as trend indicators and also identify support and resistance levels. The two most common MAs are the simple moving average, SMA, which is the average price over a given number of time periods, and the exponential moving average, EMA, which gives more weight to recent prices. Both of these build the basic structure of the forex trading strategies below. Moving average trading strategy. This moving average trading strategy uses the EMA, because this type of average is designed to respond quickly to price changes. Here are the strategy steps. Plot 3 exponential moving averages: a 5-period EMA, a 20-period EMA, and 50-period EMA on a 15-minute chart. Buy when the 5-period EMA crosses from below to above the 20-period EMA, and the price, 5, and 20-period EMAs are above the 50 EMA. For a sell trade, sell when the 5-period EMA crosses from above to below the 20-period EMA, and both EMAs and the price are below the 50-period EMA. Place the initial stop-loss order below the 20-period EMA, for a buy trade, or alternatively about 10 pips from the entry price. An optional step is to move the stop-loss to break even when the trade is 10 pips profitable. Consider placing a profit target of 20 pips, or alternatively exit when the 5-period falls below the 20-period if long, or when the 5 moves above the 20 when short. Moving average envelopes trading strategy. Moving average envelopes are percentage-based envelopes set above and below a moving average. The type of moving average that is set as the basis for the envelopes does not matter, so forex traders can use either a simple, exponential, or weighted MA. Forex traders should test out different percentages, time intervals, and currency pairs to understand how they can best employ an envelope strategy. It is most common to see envelopes over 10 to 100 day periods and using bands that have a distance from the moving average of between 1 to 10% for daily charts. If day trading, the envelopes will often be much less than 1%. On the 1-minute chart below, the MA length is 20 and the envelopes are 0.05%. Settings, especially the percentage, may need to be changed from day to day depending on volatility. Use settings that align the strategy below to the price action of the day. Ideally, trade only when there is a strong overall directional bias to the price. Then, most traders only trade in that direction. If the price is in an uptrend, consider